I think the market would figure it out. I think what took place yesterday was fluff. I mean, it's just fluff. And the market's going to concentrate on fundamentals. It's going to concentrate on what Yellen said. And unlike a number of other observers, I don't expect the Fed to raise interest rates again this year. And as a matter of fact, as Trump puts some people on the Fed, I think we're going to come to a standstill and maybe even reverse course as the United States government wants to build out infrastructure and military spending. So I'm fairly sanguine at this point about any problems.
Because the reason I ask, I mean, depending on where you sit in this whole political debate, there's no really objective analysis other than the market about whether something's really going to be serious or whether it's not. You have one side, you know, anything that comes out, they'll dismiss it as irrelevant. You got the other side, every single thing that comes out is treasonable or a constitutional crisis. So I look to the markets to tell me when something really is serious, and I'm just wondering whether you can really trust it, because the market is just made up of the same type of people trying to judge what we're judging. But I would hope that the smart money would really know when this got really serious or not, and you could use that as a gauge as to whether we've reached that point. You don't know whether that's true or not. I mean, but then again, in Brexit, those idiots, the bettors didn't know over there. The bettors didn't know here. The smart money didn't know Trump was going to win. So you did, but the betting market still had Hillary up, right? So maybe the markets don't know.
Well, Joe, I think the markets are looking at the fundamentals of earnings and what things are doing. And all this fluff since Trump has been elected.
Well, it's fluff until it isn't, Mark. That's my point.
Fluff.
I mean, I understand it's fluff, but if it truly got to the point where you were saying, wow, President Pence or something like that, I don't know.
Joe, I don't think we're anywhere close to that. And
I don't either, but I'm just saying with the market, no. Okay, so we'll put that on hold because the market is recovered yesterday. And you have a question about Yellen?
Well, no, I'm just listening to the dialogue, and for Mark and for you. I mean, do you really believe these fiscal policy initiatives that we were all so excited about in November, December, they've been priced out of the market? The asymmetric risk right now is to the upside that something actually gets done. Wouldn't you agree with that, Mark?
No, Joe, I appreciate that opinion, but what I honestly think is what everybody's realized is that what Mr. Trump and company want to do is going to be extended. In other words, the timeline is going to go out a lot further. You still have the major central banks of the world monetizing debt, which flows into America. People have been totally wrong, Joe, as you know, about interest rates. I frankly think we're going to probably head back to the line in the sand 232 and maybe go back under it. There's just increasing demand for anything with yield, and I think it's going to continue.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.